Okay, I just titled this chapter Other Stuff. So, in the previous chapters, I've talked about the coverages that are pretty standard, don't necessarily come with the policy, not that kind of standard, but they are usually available from all carriers. As time's gone by, these carriers have tried to separate themselves from the competition by offering some new perks. They don't all offer them. Many offer something at least, and they all sort of have their own names for it. So one of the big ones is accident forgiveness. So with accident forgiveness, it just means they're not going to count a accident against you. So you hit something in your car, it's your fault. So now it's an at-fault accident. That's an at-fault accident. So what typically happens is your premium is going to go up. And the reason the premium goes up after an at-fault accident is because you're now a higher risk. And now this is how underwriters see things, so you may not agree with it, but here's what it is. If you never had an accident, then say you're with a company for 5 years and they're like, hey, we're gonna give this guy a premium of being, he's not a risk at all, he doesn't get in accidents. Well, then you have an accident. So they're like, oh, it's not a guy who never gets in an accident. It's a guy that has an accident every 5 years. I know it sounds weird, but that's kind of what the thought is. And then there is actually research out there that shows if you have an accident, I don't know the numbers, but there is a much bigger chance that you're actually going to have a second accident in the next 3 years. So just happens. And I have seen that play out. It's just kind of weird. So anyway, that's why your premium is going to go up. So some of these companies came out with this accident forgiveness for those people who don't have a lot of claims. And so they're driving along for 3 years, don't have an accident, and then boom, they have an accident. If you have that on the policy, then it might just completely wipe that away. So it's just going to say, no, no accident, you're fine. Some of those companies, you have to pay extra for the accident forgiveness. A lot of them you will earn accident forgiveness over a period of time, but it's about 5 years of being with that same company to earn one of those waivers. And some of them have it upfront from day one if you pay for it. Some of them have one accident forgiveness. Some of them have unlimited accident forgiveness. You could drive down the road and hit everybody on purpose and your premium wouldn't go up. A very good possibility that they would not renew your policy next time. But so anyway, that's one of the big ones, is the accident forgiveness. The next big one that people are familiar with is I think one company calls it vanishing deductible. Now, this one's kind of an interesting idea, and it gives you the power to kind of play around with the numbers to get a better price. So with vanishing deductible, once again, some of them, if that's on the policy, they may start you off with $100, and then you earn $100 every year. Some of them do $50 every 6 months. Just depends on how they've got it set up. But it basically just means you have, let's say you have the standard 500 deductibles. So this is comprehensive coverage. This is collision coverage, chapters for those earlier. Some of the companies will let you take that money that you've saved up for that deductible waiver and put it on either of those coverages. Some of them only let you do it on collision coverage. So this would be, say I've got this company, they start you off with $100 and then $100 on the anniversary extra. So I'm just started my third year, so I have $300 saved up. I've got a $500 deductible. I hit somebody, I'm only paying $200. And that uses that up. It's like money in the bank. So you've used it up. So now if you have a second accident, well, you're going to be paying $500 because that's what your deductible is. But the fun thing here is if I've got, say I've had the policy for a while and I've actually got $500 saved up in my deductible bank. Say I've got a $500 collision deductible. I can leave it like that, and just driving around, I know if I ever hit something, I'm gonna get my car fixed for free because I've got a $500 deductible and I've got $500 saved up, right? The other thing you can do is you can say, you know what? I'm okay with having to pay $500 out of pocket, so why don't we make my deductible $1,000? If I have an accident, my deductible bank kicks in the $500, I have to pay $500 and my car is fixed. But in the meantime, I'm paying less premium for a $1,000 deductible than a $500 deductible. A lot of times it's not a lot, but it is something that kind of gives you that freedom to adjust those coverages. But as with accident forgiveness, it's something that you're going to be paying extra to have that coverage on there. So you really need to kind of look at is the benefit worth the premium? And for some people it will be, and for some it won't. Different situations call for different things. Actually, there's two other things that not everybody has. And these are really interesting. One of them I really like, and one it's something that a lot of times people expect it and they don't realize it's the case. So the other two to talk about are a separate glass deductible, separate from collision, and the other thing to talk about is OEM replacement parts. So let's talk about glass. Let's say I am driving around with a $500 collision deductible and a $500, let's do this. Let's say I'm driving around with a $250 comprehensive deductible. And I'm talking to my friend and they said, well, I don't like having that low deductible because you have to pay more. And I'm saying, yeah, but I like having that low deductible because the only thing that I've ever had happen to me repeatedly over the years in my car is a cracked windshield. And now some of these cars with sensors and everything in the windshield, it's crazy what they have to do to replace the glass and then calibrate things. So it can get really pricey. But a lot of times it doesn't exceed a $500 deductible. So you get a lower comprehensive deductible and you get that rock chip that hits and then almost immediately splits your glass. It's got to be replaced. That goes under your comprehensive coverage, and so your comprehensive deductible will apply. Some companies now have a separate glass deductible. So you could have a $500 collision deductible, a $250 comprehensive deductible, and one company that I know does a $0 glass deductible, and one does a $50 glass deductible. So this does a couple of good things for us, at least in the area that I'm most familiar with. It allows us to get these glass claims done for very little money, if any at all. And when you get a rock chip, sometimes it stays a chip, and most insurance companies are going to fix that for free because they'd rather fix that for free than have to replace your whole windshield. So they'll fix it for free, most of them. But as soon as it starts to rain or it heats up, cools off, or whatever happens, those quickly become a crack. Now, I've heard that they can fix a crack up to about the length of a dollar bill. You still have that little line in there because they just kind of squirt goo in there. I don't know what they do. But anything bigger than that definitely has to be a full replacement of that windshield. So with this, in this situation, I can leave it as a $250 comprehensive deductible if I want to. And that's going to cover, hail, flood, and all that kind of stuff. But the other thing I could do is let's say I move that up to $1,000 on comprehensive. Because now I've got, either one of these, both of them are good. Let's say I got the $50 one. So now instead of $250 on my comprehensive and paying for that every 6 months or 12 months or monthly, now I can raise that to $1,000 because now my comprehensive is only covering things like flood, theft, vandalism, hail, tree falls on it, that kind of stuff. My glass is covered by a separate deductible. So it kind of a fun thing to do here, save money by going with a larger deductible. You're going to be spending more to have a separate glass deductible typically, but you're out of pocket very little when you have a glass claim. So something interesting that is happening is these separate glass deductibles. Okay, so the last thing to talk about is OEM replacement parts. Now, OEM stands for original equipment manufacturers. That means if you drive say you drive a Toyota, because I do, and you get in a wreck, doesn't matter whose fault it is, don't worry about that. But you get in a wreck and now you need some front end work done. You take it to the body shop. The standard response to parts from an insurance company is the lowest price possible. And so that's going to come into play with either a used part. So let's say it's my fender here, and they go out and get another Toyota 86 front right fender from a junkyard or wherever, put it on the car, paint it to match. So in that case, that's technically an OEM replacement, right? Because it came off of the same type of vehicle. The other thing that happens very often is they use a part that is called aftermarket. That means they bought a fender to fit a Toyota 86 in this case, and it's brand new, but it wasn't made by Toyota. It was an aftermarket. I used to work in a body shop when I was in high school, and the thing about aftermarket parts, they're better now than they were back then. That was a long time ago. But they were never 100% correct. Sometimes we had to drill out a hole because it was off just a little bit from where the bolt needed to go. Sometimes the corner of the fender was at a slightly different angle at the top than it should have been. Very minor things. And things that most people would never notice. So aftermarket, if it's a lower price than that used one, that's what your insurance company is going to pay for. It's always the lowest cost to get you back on the road. So some companies, very few, have an endorsement that you can add that is specifically for this situation, and it's OEM replacement coverage. And so you are going to pay a little bit more for it, but it's a guarantee from that insurance carrier that when they go to fix your car, they're not getting an aftermarket piece that is really close but not quite. They are getting a manufacturer's part. It could still be used. It could be new. It just kind of depends on what's available, but it will be an original part. So if you've got, like, say you've got a Tesla and you don't want to take chances on an aftermarket part, and maybe it doesn't quite fit right, and you spent a lot of money on this car and you want it to look right. This OEM replacement concept is pretty interesting. That way, when you get it back from that body shop, it's still 100% Tesla, right? It's not 95% Tesla and 5% Jim Bob's aftermarket fenders or whatever. So anyway, kind of an interesting thing there. It's just an overview of 4 of the big ones right now. There are some other things that are out there, but these are by far the most widespread, probably the most beneficial extra coverages, other stuff that you can get. So make sure you ask your agent about it. And if you're anywhere in Texas, I can be your agent. Anyway, that's it for other stuff.